Hi farms, welcome back. In today's video, I want us to take a look at Boom 500. Let's take a ride back into history and see the price action that played out. Following our trading components, first, you want to be able to identify the overall trend of the market from a higher time frame. Is it bearish or is it bullish? You want to be able to identify that. Or if it's bullish, you want to have the market creating series of higher highs, higher lows, just in that order. Number two, you want to be able to identify your trading range. You want to find out if it's a higher high, you want to be able to identify the lower high as your trading range, and to the lower low. This becomes your trading range. You want to be able to spot the trading range, the last high and the recent low, or the recent low, the last low and the recent high. You want to be able to get that fixed. If it's on a bullish structure or trend, you want to identify the last low to the recent high. This is the recent high. You want to identify that. Then you wait for price to come in here so that you can take price upward. Then number three, you want to be able to spot the institutional candle that captured liquidity and led to a break of structure. So in this regard, you want to wait for that candle around this region and sell downwards. You want to wait for this candle and sell downwards. Why? If it's on the bullish run, you want to wait for this candle and then you buy upwards. You want to wait for the candle around this region and then you can take price higher. And lastly, we want to wait for price to return to that IC, institutional candle, order block, and then we look for lower time frame entry. This we are taught in our market structure series. If you have not watched any of them, you will need to click on this link and you'll be able to watch that. Kindly subscribe to my channel to stay updated on how to use these simple trading components. And don't forget to leave a comment. Thank you. Let's go to Boom 500 and find out what it has been doing in a while. First, I want to identify the structure. What's the structure of the market? If I pitch my screen, you will see that this asset has been on a downtrend for a very long time. You can see series market giving us a low, a high, and the market comes back to give us a lower low, gives us a lower high, coming into this imbalance, and price gives us a lower low. Yeah, the body is closed below, I think so. Price give us a lower high, and price is giving us a lower low currently. Price has given us a low. Now we should expect price to keep going lower. The structure we have identified is bearish. So let me write that out. Structure is bearish. That's the first thing to be able to identify. Structure of 500 is bearish. Leave that here. Let's leave that here. Okay, let me edit this. Okay, I think I'm correct now. It's bearish. So the next thing is to identify your trading range. What is the trading range? The last high and the recent low. So this is the last high. You can see that from here. Let me make this black. This is the last high and the recent low. This is the last high. So this is my trading range. And then the recent low. This is the recent low. Then number three, you want to find out that institutional candle that captured liquidity. The institutional candle, this is the candle here. All this move up is what led to the move down. This move up, all this move up is what led to this impulse move. So currently we are in the correction phase. We have an impulse move since it's bearish. Impulse move from the lower high down to the lower low. Now, this is a correction phase to come into this place and then probably should give us another impulse move downward, forming a lower low. This is just the first step in market structure. You want to find out the trend, and then the next lower high, you'll be taking price down. So let's go back. We are back testing. Let's see. When price gave us this, when price gave us this zone, gave us this high, price came and gave us this range. This became our trading range when price was here, the high and then the recent low. So we're anticipating that price should come back into this region because we can see a sweep of liquidity from here. Price swept this liquidity, captured liquidity in this zone, and then gave us this break, breaking below this external liquidity. So we're expecting price to come here and go down. Remember, I said in our previous video that you want to catch a premium zone, take your fib from the lower high down to the lower low. 50% and above, it's a premium zone. You can see price came, traded into this 50%. And this 50% aligns with an imbalance around this zone. There's an imbalance around the zone that price came into. Gave us that evidence within this place, and then we went down. So when we broke this, the next, let me remove this fib level. The next trading range, this became our next trading range. Last high and then the recent low. Price came in, gave us that entry. If I bring up my feed from the high down to the low, you see price traded to the 78.6 premium zone above the 50% level. I remove this. When price traded down, price has given us a new high. This becomes a new trading range. Let me remove this new trading range. The recent high or the last high and the recent low. So let me write this here, top range. This is the top range. Top trading range. Okay, I think this should be cool. Top range. This is the down range. This is the down range. So we want price to keep going up and down. And you know, since this is a correction move, it will not just go at once. It will keep creating a lot of liquidity. I'm going to zoom out to go to a lower time frame to keep creating lots of liquidity, and then to be going in that order until we're able to come to this institutional candle here that captured liquidity, and then probably will take price down. So let's zoom out. Let's go to a lower time frame. The range has been established. Let's see what price has been doing from here. Okay, as I zoom out, it becomes very clear what price has been doing. Let's look at the range within this place. This was a high, the top range, and then price came, gave us the down range. What did price do? Price traded back to this last candle that captured all of this liquidity. Price came, traded into all this last candle. This last candle, price traded into it. But this was the candle that cleared all this liquidity within this region. internal liquidity, the candle that cleared all of them, price traded back into it. Price traded back into this candle and price broke this range. So this was the last high. This was the last low after price broke out. So currently we have a new trading range. This is the top range now, the last high, and this is the current down range. So probably price should give us that move down, because you can clearly see this captured liquidity within this zone. There's also a liquidity sweep around that zone. Price captured this liquidity that was here, and this is the candle. This was the candle. Okay. This was the candle. So probably price should come back into this candle and give us that price should return back to this candle, and then we trade higher, because we still have a lot of we still have this candle here in drawdown that has not been tapped. All this move up from here, this is the mitigation candle, all this move up that cleared all this liquidity within this zone. This was the institutional candle from here that was captured. Let me go to 4 hours. Let me see if I can get it clearer. This is a daily time frame. Let's see, check the 4 hours. Let's see if we can get that candle. Okay. We're back testing, we're going back in history. Okay, this was the move, all of this move, all of this area. Yeah, all of this area. All of this area is my area for my potential area for rate distribution. All of that zone is what I'll be looking at for price to come back into and then give us the play we are looking for. Here's my chart. Hope I haven't lost my chart. Okay. Okay. Daily time frame so that we can get it clear. Okay, I think it's clearer now. It's clearer here. Yes, all of this zone is my top range. Price hasn't got into that place, so we want price to keep trading gradually inside. Is a correction phase, so it's going to take some time. So possibly we should have price coming to this region, and then we come here to go down. This is how to mark out your chart. You want to wait for that entry at this zone. This is the zone for potential area for redistribution. Potential area for redistribution. I want to see what price we do within this region, and then we can take price down. So that's just it. Price can come in here. Price can decide to come in here. But remember, this is the counter trend. This is the range, top range, down range. And we don't encourage taking a counter trend if you don't know how to trade. You're a beginner or you are not yet an expert. Just stick with the structure. Wait for price to come in here, and then you can take price down. But market is fractal, so price will do the same thing. What it does on a higher time frame, it will still do on a lower time frame. So your own is just to be able to spot out what is happening, but you take structure and the point of interest from your higher time frame, and you want price to come in there and sweep all this. You can see like a triple bottom or double bottom within this place. This is external liquidity, which is going to be taken out. This is your top range. market will come in here. So if you can get here, okay, it's fine. You can take price from here down to this place. These are all liquidity resting within this region. These are liquidities around this region, which price should come and clear. This is internal liquidity. We expect price to come into this place and clear all of it, all of it, all of it, trade into this area of for redistribution. If I bring up my fib level and I take it from the high down to the low, the last previous high or last high to the last low, you will see it's aligning with 78.6 and 88.6. It's telling you that this is high probability trade setup. So since we are back testing, I'm going to be dropping this on the Telegram group so that you can keep an eye. If you are not in the Telegram group, the link will be in this description page of this video so that you can get in, and then we'll wait for lower time frame to come into this place and price will do the same thing. Let me show you this, which I scripted out. I wanted to let us see best confirmation entries. This is exactly what is happening. Market comes here, gives us a high, and then comes here, create a liquidity. Market comes, price takes away this liquidity sweep within this region. Liquidity sweep, price takes away this last high, this external liquidity, and then comes here, change of character. Price indicates a change of character at this region and leave an entry here. So price trades back into it, created some forms of liquidity around this place, wicked it out, traded into this first, this becomes your first entry, traded into this IC or other block within this place, gives us this entry, changes character again or shift in market structure, and then price return back. This becomes second entry within this place, and then you'd have cut this. Price gives us something like this, and then price sometimes will come back to entry and then go the same way. And that's why we encourage you, take 1 to 3. Once you're able to get 1 to 3, take some profit off the market, because sincerely speaking, price will do what it's like. You don't control price. I don't control price. We are not smart money. So you want to ensure that you don't get trapped or your profit goes off. So just take a 1 to 3. Price came back to entry and still went back to the same direction. So this is how to check out what trade to get into. If I keep going back and back and back and back, you will keep seeing that entry. Yes, this was an entry within this place. This was the other block that price came into. You see within this other block, price swept here since price swept these highs, swept all this liquidity within this region, broke. This was a change of character. This was a change of character here. And the price came, broke all these, took away these liquidities, and broke the lows. Price broke the lows, establishing a new trading range. So this becomes the last trading range, and then this became the low. So if this was your trading range, you were looking to take price, this was the trading range you're looking for price to come back into, price actually came into it and gave us the move down. Price came into it here and gave us the move down. Immediately price broke, price came back. If I pick out my fib from here and I capture from the high to this low, you see that price came to the 78.6 region, the premium zone, and then we sold downward massively. So it's the same thing. It's the same thing. So I'm going to be dropping this on the Telegram group for this video. Don't forget to subscribe, share our videos, like our page, drop your questions and comments in the comments section of this video. Thank you very much. Peace out.